What's up, guys? I'm Nobody Special. And there's a lot of stories going on right now about food inflation and about empty shelves, but the real food inflation story is just getting started, and that is the fertilizer industry and what has happened with fertilizer prices as a result of these energy prices. And that is going to have major reverberations throughout the food industry for the next year and a half. And although in the last week or so there's been some price relief for farmers, it may be too little too late for farmers here in the U.S. The European farmers, meanwhile, are getting absolutely crushed. And now we're looking at weather impacting South American crops. All these things combined says we are in for a rough year for food prices. And stick around till the end. I'll show you what my plan is for investing in this trend. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special, and we've been covering this fertilizer story for a while here on my channel. As a result of this energy crisis, in particular the spike in natural gas, the price of fertilizer around the world has gone up significantly in these past few months. In some cases, prices are up over 100%. This has led to some countries like China and Russia eliminating exports of fertilizers, and due to the high price of natural gas in Europe, they had to shut down a lot of their fertilizer production. So fertilizer supplies are very tight, and prices went parabolic in December. Well, even though prices have come down a little bit recently, those lower prices never materialized, and now we've got a lot of farmers who still haven't ordered their fertilizer yet, and they might be scrambling for supply at the last minute. Now, before we get into the details of this, folks, I have to ask, could you please like this video and subscribe to my channel? Don't forget that notification bell. It really helps me out, and I'd be forever in your debt. And now it's that wonderful time when we shrink my big, fat melon of a head. And let's get into some of these stories. First of all, let's talk about this recent price drop, because prices went almost parabolic in December, over 100% for some fertilizers. And we finally saw a little bit of price relief, at least, for some farmers. And this is dated on the 21st. Wholesale U.S. prices for fertilizer are dropping, and that could signal easing food cost pressures and relief for farmers getting set for spring planting. Corn Belt urea prices fell 8.2% on Friday to $670 per short ton, the lowest level since October, according to Bloomberg's Green Markets. Prices have fallen each week this month as the market adjusts to recent reports of full warehouses signalizing the anticipated shortage of the crop nutrient this year may not come to pass. So supplies are stabilizing and some prices are starting to come down. Now, I'll point out that they're saying the lowest prices since October. Prices in October were still astronomically high compared to historical averages. Reading on, retail prices are still at stratospheric levels, but that could soon reverse, Green Market analyst Alex Maxwell said in his email. U.S. retail urea prices are firm as wholesalers have high-cost inventory in their system, Maxwell said. As they replace inventory with lower-cost urea, I expect them to pass on the savings to farmers ahead of spring plantings in the first quarter. And this chart here is showing the change in urea prices. This red line is the drop in wholesale prices, while this black line is the retail price chart. So obviously a big drop in wholesale will eventually translate into lower retail prices. Now, will that happen in time? Nobody knows. Because remember, planting of corn typically happens in mid to late April, maybe even early May. Well, the fertilizer is typically applied right before planting, so we don't know if these prices are going to come down in time for that. And keep in mind, there are lead times involved here, folks. And if we have too many farmers who are scrambling for their fertilizer supplies at the last minute, some of them may not get it. And that's going to have a big negative impact on those crop yields. Lower crop yields means higher food prices. Fertilizer prices soared to repeated records over the last few months, spurred by setbacks including an energy crunch in Europe, unexpected plant closures, and halted exports from major suppliers. The increase has stoked concerns over prospect for further food inflation at a time when consumers are already paying more for staples like grains and coffee. And I just want to add here that they say despite the drop in January, according to Maxwell, who said prices are still almost double the level they were at this time last year. So major increased expense for farmers on top of the increase in labor costs, on top of the increase in energy. And I saw this article here, and this is out of the Associated Press. High fertilizer prices could mean smaller crops for farmers. Farmers across Mississippi are having to adjust to a steep rise in the price of fertilizer. The Mississippi State Extension Service recently released a study about how farmers are coping with fertilizer prices approaching record highs. A bag of fertilizer that would have sold for $11 in 2021 is now going for about $19.95 in 2022. The prices doubled. Needless to say, our volumes of sales and tonnage have dropped off in correspondence to those prices, said Hayes, who has been the manager of Lowndes Farm Supply since 2010. Potash is close to an all-time high of $800 a ton, according to the Mississippi State study released this month. The ongoing supply chain disruption has caused the main chemicals in fertilizer, nitrogen, phosphorus, and potash, to rise since spring of 2021. Now, I just want to draw your attention to this paragraph right here. Hayes said the higher prices will lead to farmers buying less fertilizer, which likely means a smaller harvest. He believes prices could return to normal sometime around June, while the MSU study says it could go until next winter. All right, so farmers are skimping on fertilizer because the costs have gone up so much. That means crop yields are going down, folks. And if food supply gets tighter, that means food prices are going much, much higher. So all this food inflation we're seeing right now with the supply chain and the limited shelves and all the stories that are going on in supermarkets, folks, this is just getting started, because now the supply chain crisis is hitting the farms directly. This is next year's food getting much more expensive. And I want to throw in this article I saw in Brownfield, Ag News for America. Farmers who didn't get fertilizer booked says decision will sting. And this is dated on January 21st. A pair of Western Corn Belt farmers say availability of inputs are their top concerns this growing season. Doug Bartek raises corn and soybeans in eastern Nebraska and tells Brownfield most of his chemicals have been purchased except fertilizer. He's quoted as saying, "I had purchased early on some crop inputs that I do have in the shed," he says. "On beans, I'm in pretty good shape. But the corn fertilizer, that is really going to sting." Corn. Put a pin in that. Now, up until this point, we've been focusing just on farmers here in the States. This is not a U.S.-only problem, folks. This is worldwide. And this article was in Bloomberg. The fertilizer crisis is getting real for Europe food prices. Farmers may have to use fewer nutrients or pass on the costs. Gas crisis export restrictions hit nitrogen fertilizer supply. And this is also dated on the 21st. As Europe's farmers prepare to spread fertilizers on fields after winter, sky-high nutrient prices are leaving them little choice but to use less and try to pass on the cost down the food chain. Use less fertilizer. There's that trend again. For growers of staples like corn and wheat, it's the first time they've really been exposed to a fertilizer crisis fueled by an energy crunch, export curbs, and trade sanctions. It now costs much more to buy chemicals needed for winter crops coming out of dormancy, and the extra expense could prompt smaller spring plantings that make up roughly a third of European grain. Many farmers yet to secure chemicals are either waiting until the last minute in case prices ease or may spread them more thinly. And that's a gamble that a lot of farmers are taking right now, hoping those prices are going to come down. And if they don't, or even if they do, the supplies may be tight. They may not get their fertilizer in time. That means lower crop yields. Bad news for food inflation. Just a couple of data points here. In Hungary, nitrogen fertilizer usage will drop around 30 to 40% this season, hurting crop yields, said Georgi Rasko, an agricultural economist who has farms in the country. If there's a drought around the end of April and May, the effect could be even more devastating since nitrogen helps plants survive dry days. So there's another thing this fertilizer shortage means. It means our crops are going to be more vulnerable to weather events this year if there's limited nitrogen uptake. Some crop yields could be cut in half without nitrogen products, said Zoltan Bajk, chief strategy officer at Hungarian producer Nitrogen Muvek. Polish peer Grupa Asadi SA said other risks include a buildup of late orders and potential delivery days. And there's that theme again of people ordering at the last minute and uncertainty of supplies, and it may not be there in time for planting. This could result in a delayed planting season. That's another way that crop yields could be impacted by that if there's a shorter grow season, because they delay planting for fertilizer availability. Now, for a couple of weeks now, I've been talking on this channel about how I think corn is going to be particularly affected by this trend, because corn is the most fertilizer intensive of all of the major grain crops. Corn is not able to extract nitrogen from the air like soybeans are. Corn gets all of its nitrogen from the soil, which means corn needs more fertilizer than most of the other crops. And there's two big trends playing out. There's either the less application of fertilizer, which will lower corn yields, or farmers abandoning corn planting altogether and opting to grow soybeans or wheat instead in order to save on fertilizer. So I've been saying that investment centered around corn is a possible leveraged play to this fertilizer story, because I think global corn prices are in for a big, big run this year as this trend hits that crop in particularly hard. And I just want to draw your attention to this story because one of the biggest corn producers in the world is Argentina. Drought is emerging in Argentina's biggest corn producing regions. Argentina is one of the biggest corn exporting countries in the world. Increasingly dry conditions in Cordoba, Buenos Aires, and Santa Fe provinces have driven Argentina's corn production forecast down 13% in the week ended January 20th. Grows machine learning based yield forecast model shows. Grow's forecast now sits 27% below the USDA's latest projection, and Grow expects the USDA will need to adjust its forecast lower in the February WASDE report. Okay, so right now the USDA is forecasting a lot more corn is going to be coming out of Argentina and South America than this model is showing. Remember that one. Dry conditions linked to La Nina are dragging down yield prospects. Argentina's corn crop is currently in the silking stage, and if hot and dry conditions impede pollination, some damage to the crop may be irreversible, because when corn is in its silking stage, that is when the actual corn kernel is developing, when that pollination occurs. And if it is too hot or if it is too dry in that silking stage, you can get some failure to pollinate within the ear of corn, and you end up with a condition that's called tipback. And here is a picture of what tipback looks like. You can see you get corn forming towards the base of the ear, but as you move out, eventually you get where all of these failed pollinations occurred, and that obviously reduces the yield across the whole field. So right now we have drought and we have high heat conditions in the South American corn belt right at the peak of this silking stage. So tipback may be something else that causes further reduction in corn yield this year in those all-important South American crops. And I also want to point out this article, CBOT agricultural futures surge on adverse weather in South America. March corn scored a new rally high as the global feed market readjusts to account for sharply lower South American supplies. Ag Resource suggests that the USDA must lower South American production by another 12 to 18 million metric tons to account for current crop health in Argentina, Paraguay, and southern Brazil. So here is yet another crop forecasting model that is saying the USDA forecast is way too high. And I think what we're going to see is when the USDA comes out and finally lowers their forecast, as these other two models are suggesting, it's going to be a shock to commodity markets, and we're going to see corn prices head higher. And I'd also mention here, they're also talking about Paraguay and southern Brazil, and southern Brazil is one of the biggest suppliers of corn in the world, as is Argentina. Concern over soil moisture in southern Brazil ahead of winter corn seeding is elevated. Reducing South American supplies will curtail spring and early summer exports. There are just no meaningful feed import alternatives available other than U.S. corn between now and July. Okay, so obviously corn is the most vulnerable to this situation. So let's take a look at corn prices. And here, looking at this chart, this is a 3-year graph of corn futures. Now you can see we went up for most of 2020, as most commodities did, and then we started 2021 absolutely rip-roaring out of the gate. Now we went way too high, too fast in May of 2021. That's when there was rampant commodity speculation. If you can remember, that's when lumber prices went parabolic and then came crashing back down. So obviously, corn prices corrected, and if you ask me, they overcorrected a little bit. And then back in the fall, when this fertilizer story first started to develop, and I mentioned how corn might be a way you could trade this, you've noticed we've been creeping back up ever since, but still well below the high that we made back in May. And I think this commodity in particular is going to have a lot of room to run, because corn is going to have an amplified effect because it is such a fertilizer intensive crop. I think you're going to see less corn planted, and I think the corn that is planted is going to yield less grain. And also I'd point out that this is going to impact your meat prices, folks, because what do you think they feed hogs and what do you think they feed cows? A lot of the stuff is fed corn, right? So this is going to impact your meat markets also. Again, food inflation just getting started, folks. If you think there is price relief around the corner at the supermarket, you got another thing coming. Now, this is the part where I have to CYMA here and say this is not financial advice. This is only financial edutainment. I want you to do your own research and your own DD and arrive at a decision that's right for you based on your unique situation. But one of the ways I have been investing in this trend is I have bought call options out to January of 2023 for ticker symbol CORN. And that is an ETF that invests in corn futures. And you can see this ETF has had a pretty good year. Again, here's your peak back in May, and it corrected. And we had this consolidation period, and I drew this flag pattern while we were consolidating. That was back in September, October timeframe. You can see we've broken out of that pattern now, and we're on our way higher. And folks, I think this one has a lot of room to run, again, because corn in particular is so much more vulnerable to the other crops, to this fertilizer situation. I think we're going to get less of it planted, and the stuff that is planted is going to yield a lot less. So long story short, although there has been some short-term price relief going on in fertilizer, it's too little, too late, in my opinion. I think there are still a lot of farmers out there who haven't placed their orders yet, and that means there's a little bit of withheld buying pressure that could drive those fertilizer prices right back up. There's uncertainty of whether or not the market's even going to be able to supply that much fertilizer in time for the spring planting season. We still don't know how much less fertilizer the farmers are going to apply, but it is a safe bet that they're going to use less this year. And that means globally crop yields are headed down in 2022. And that means food prices are heading much higher. And in particular, corn, because corn is a unique crop that requires a lot of fertilizer. I think corn prices are particularly vulnerable to this trend. And that's why I'm investing in that ETF, CORN. Again, not a financial advisor, not financial advice. Do your own research, your own DD, arrive at a decision that's right for you. Guys, I want to thank you for your time. Thank you for watching this video. Don't forget to hit that thumbs up, subscribe to my channel, and hit that notification bell. It really helps me out. I'd be forever in your debt. Until next time, live small and dream big.